Welcome back to Investing Talk podcast. Today we're taking a closer look at Amcor. The global packaging company. A lot of you might have their products around the house, maybe even own the stock. We're going to break down what to watch for as they get ready to release their upcoming earnings report. Our mission today is really just to give you the essential info, boil down the key details, and help you figure out what actually matters in all that financial data. And hey, before we jump into Amcor, if you find this kind of analysis helpful, please consider subscribing or hitting that like button. It really helps us keep doing these. And definitely let us know in the comments if there's another company you want us to look into. Or, you could even buy us a coffee to keep these conversations going. All right, let's unpack this. When are we actually going to hear from Amcor, and what's the general expectation from analysts?
Okay, so Amcor is set to announce their fiscal 2025 fourth quarter and full year results. That's happening before the U.S. market opens on Thursday, August 14th, 2025. The earnings call itself is scheduled for 8:00 a.m. U.S. Eastern Daylight Time. So early start if you want to catch it live.
Got it, August 14th. And what about the numbers? What are the consensus estimates analysts are, putting out there?
Well, the consensus estimates are pointing towards revenue around $5.18 billion. And for earnings per share, the main consensus for Q4 2025 is sitting at $0.21. Although it's worth mentioning that Zacks also has an EPS consensus listed at $0.22. That might reflect a slight upward revision, And it projects a year-over-year increase of about 4.8%. So some modest growth expected on the bottom line.
21, maybe 22 cents? Okay. Is there any whisper number? Anything unofficial floating around?
Doesn't seem like it. The sources we looked at don't really indicate a clear whisper number. They usually suggest there isn't a strong feeling in the market that they'll significantly beat or miss those main estimates.
Okay, fair enough. And did Amcor itself give any specific guidance leading up to this report? Any hints from management about what they're expecting?
No, not really any explicit forward guidance specifically for this report, at least not mentioned in the sources. But, if you look at their past calls and discussions, management consistently talks about navigating volume pressures and also maintaining margins and, really focusing on cost discipline.
Right.
So it's pretty likely those will be the key themes. Again, investors will be listening for updates on those fronts rather than, say, big strategic shifts.
That focus on cost discipline, yeah, that makes sense in this environment. So looking back then, how have they actually done against expectations historically? Do they usually surprise?
Yeah, what's kind of interesting here is Amcor's consistency, especially on EPS. Over the last 4 quarters, their earnings per share has generally matched the consensus.
Yeah.
For example, Q3 2025, they reported $0.18 EPS, right in line. But, and this is important, their revenue in that same quarter, $3.33 billion, actually missed the consensus, which was $3.51 billion.
Mm-hmm. So EPS holds up, but revenue can be a bit soft.
Exactly. Generally, there's been a pretty negligible surprise margin on EPS, often bang on expectations, like Q1 2025 was 16 cents, just as expected. So it suggests they manage expectations pretty well, at least on the earnings line.
And how does the stock price typically react right after these announcements? Does it, jump around a lot, or is it pretty tame?
It's actually been quite muted, the post-earnings reactions. We're usually talking pretty small moves. Think plus or minus maybe 1% to 2% right after the announcement, especially when the results match estimates like they often do.
Really? Only 1-2%?
Yeah, there hasn't been really significant sustained momentum either way. Sometimes you might see a small gap up or down at the open, but it often reverses during the day or over the next few sessions, particularly if revenue falls short, even if the bottom line, the EPS, is in line.
Okay, so consistent EPS, sometimes weaker revenue, muted stock reaction. What does that tell us about the bigger picture trends for their key metrics over time?
Well, if you connect the dots, revenue has shown these sort of mild year-over-year declines, like that Q3 2025 example, down 2.3% year-over-year. But the EPS performance, as we said, has stayed relatively stable or maybe slightly positive, and that really points to their effective cost management doing its job.
Right, offsetting the weaker top line.
Precisely. Operating margins have definitely faced pressure because volumes have been slow, but those cost savings have helped cushion the blow, at least partially. It shows they're really focused on defending profitability when growth is hard to come by.
That resilience is definitely something investors look for. Okay, let's pivot then to what's been happening during the specific quarter, the one they're reporting on. Any major news? Big strategic moves from Amcor.
It's been relatively quiet on that front during this quarter. No major mergers or acquisitions announced, nothing really transformative. They did announce the shortlist for their latest liftoff competition. That's focused on sustainable packaging innovation.
Oh, right. Sustainability
Yeah,
focus.
it shows their commitment there, which is important long term, but it's not really a direct financial driver for this specific quarter's results. The lack of big news kind of fits that steady, predictable profile we've been talking about.
So, pretty quiet internally. What about the external environment, the broader packaging sector, macroeconomic trends? Are things looking up or are there still headwinds?
Yeah, that's a really important question. The operating environment globally for packaging is still pretty subdued. A big part of that is softness in consumer spending, people cutting back a bit, and also these ongoing destocking trends across packaged goods.
Destocking, meaning companies are using up inventory instead of ordering new packaging?
Exactly. Retailers, manufacturers, they're working through what they already have on hand. That directly hits demand for new packaging materials. Now, on the plus side, input costs like resin and energy, they've stabilized somewhat, which helps margins. But the sector overall is still facing pretty significant headwinds from just weak volumes and also muted pricing power. They can't easily pass on price increases.
Tough market then. So, given that backdrop, what's the general feeling among analysts covering Amcor? Are they leaning positive, negative?
The outlook seems generally neutral. Analysts tend to highlight the company's stable cash flow, which is definitely a positive. But they also acknowledge the, limited top-line growth potential right now because of those sector headwinds we just discussed.
Makes sense.
Yeah, so price targets for the stock have pretty much stayed anchored around where it's trading now. Haven't seen any major upgrades or downgrades during the quarter. It all kind of points back to expectations for another steady inline report.
Okay, neutral sentiment, steady expectations. Let's talk about the stock itself leading into the report. How has the price been acting? Is the market anticipating anything big?
Well, the stock has been trading sideways to maybe slightly weaker heading into earnings. It closed recently around $9.37. That suggests pretty tepid sentiment, relatively low expectations baked in by the market.
So no big run-up beforehand?
No, exactly. No significant run-up in price, which usually indicates the market isn't really pricing in a dramatic earnings beat or anything like that.
Okay, and technically speaking, looking at the charts, what are the key price levels investors should probably keep an eye on? Support and resistance.
From a technical viewpoint, key support for Amcor seems to be around the $9 level. That's where it's found buyers near recent lows. On the upside, resistance looks like it's probably between $9.60 and $10. You've got recent highs in there, plus $10 is a psychological round number.
$9 support, resistance up towards 10.
Got it. And what about volatility? What's the options market suggesting about how much the stock might move? Right. The implied volatility on the near-term options contracts is elevated compared to its historical average, which is normal before earnings. The market seems to be pricing in roughly plus or minus 4% to 5%.
Yeah.
Move around the earnings announcement.
4 to 5%. Is that high or low for Amcor?
It's pretty much in line with what we've seen in prior quarters for Amcor and similar sort of low beta industrial stocks, companies that aren't typically super volatile.
Yeah.
So yes, elevated volatility compared to a normal day, but not necessarily signaling expectations of a massive shock. It's kind of the standard earnings expectation.
Okay, putting all this together, the history, the current environment, the market setup, what would a bullish scenario look like for this earnings report? What would be good news?
Well, a bullish case would definitely involve beating expectations on revenue. That would mean either a positive volume inflection, so volume's actually starting to grow again instead of decline, or maybe better than expected pricing power. And of course, an EPS beat above that $1.22 consensus figure we mentioned.
Right.
Beyond the numbers, really strong positive guidance for the full year would be key. Or maybe commentary from management forecasting that volumes will stabilize or even improve soon, and maybe seeing margin expansion in fiscal 2026. Also, any signs of acceleration in their innovation pipeline, like with sustainable packaging, could add to a bullish view.
Makes sense. On the flip side, then, what would a bearish scenario look like? What are the red flags we should watch out for?
The bearish case would basically be, well, another revenue miss. If revenues continue to decline year over year, that would signal ongoing, perhaps deepening demand issues. Also, looking for stagnant or even compressed margins, or maybe signs of new cost headwinds that their cost control efforts aren't quite managing to offset.
Okay.
And definitely weak guidance. If management sounds downbeat about volume recovery for the next year, that would be a major concern for the market. Also, any kind of unexpected charges or maybe setbacks in those cost-saving programs they've been focused on, that would also weigh heavily.
So if you had to boil it down to just one key metric, the single most critical thing to watch in this report to really gauge Amcor's health, what would it be?
That's a good question. I'd say the most critical thing, fundamentally, will be the volume trends,
Yeah.
specifically within their flexible and rigid packaging divisions.
The actual amount they're selling.
Exactly. That's absolutely critical for where revenue and margins are heading. It speaks directly to underlying demand. And maybe just as important as the reported number, any forward-looking commentary from management about demand trends and their order backlog. That's what the market will really scrutinize for clues about the future path.
Volume trends and management commentary on demand.
Yeah.
Got it. So bringing this all together, what's our overall leaning, like a confidence score heading into this report?
Given everything, our overall leaning is pretty neutral. If I had to put a number on it, maybe a 5 out of 10 on a confidence scale for a big move either way.
Okay, a 5 out of 10. Neutral. Why?
Well, the rationale really comes down to that recent history we talked about, delivering pretty much inline results, minimal stock reaction afterwards. Plus, there's a lack of major new catalysts or any explicit guidance pointing strongly one way or the other. You've got those macro and sector headwinds acting as a drag, definitely.
Yeah.
But their track record on cost control seems pretty solid, which likely prevents really significant downside risk. So it balances out to neutral.
So the key takeaway isn't really predicting a big swing, but more appreciating their stability in a tough spot.
Yeah, I think that's right. For a company like Amcor, often seen as more defensive, that consistency and ability to manage costs when growth is slow is the story right now. It shows resilience.
Okay, so with that neutral outlook, a 5 out of 10 score, what are some potential trading strategy considerations? How might different investors approach this?
Right. Well, for more risk-averse investors, given the expectation for limited movement, maybe just avoiding holding the stock through the earnings announcement makes sense. Less potential reward, but also less risk of even a small negative surprise.
Sit it out, basically.
Could be an option. Now, for those maybe a bit more risk-tolerant, you could look at option strategies like a short-term straddle or a strangle. That bets on a move bigger than the 4 or 5% priced in, either up or down.
But that only works if you expect a surprise.
Exactly. That strategy really only makes sense if you have a strong conviction, despite our neutral analysis, that there will be a significant surprise on volume or guidance. And you need implied volatility to be reasonably priced. For long-term investors, Amcor still fits that profile of a modest yield, defensive packaging play. But it does seem to lack those immediate catalysts for strong upside right now.
Good for them.
For long-term holders, maybe using any potential post-earnings weakness as a buying opportunity could be preferable to trying to trade the event itself and risking that short-term volatility, kind of letting the dust settle.
That makes sense.
Yeah.
This whole analysis of Amcor, it really drives home how important it is to look past just the headline numbers, doesn't it? Understanding those operational levers like cost control, especially when the market's challenging. And as you think about this, consider how companies like Amcor, even without splashy M&A or huge product launches, manage to navigate these pressures. Is that steady focus on margins and discipline maybe more valuable strategy right now than chasing aggressive growth? And what does it tell us about the current market cycle and maybe what investors should be valuing? Something to think about. Thank you for joining us on Investing Talk Podcast. Remember to subscribe, like, and drop a comment. Let us know what you thought or what company you'd like us to dig into next time. We really appreciate you being with us.